Okay, hi guys. Welcome to the FX Street webinar. Sorry I missed last week's. Hi Steffi. I've been working down in London and basically left my microphone down there. So that's my excuse and I'm sticking to it. I think today, we're due to talk about the DAX and gold, and as we normally do on the FX Street webinar, just going to talk about what prime pairs, excuse me, or indices or commodities we see as being sort of teed up for decent moves at the moment. And I'm going to talk about correlation between different currency pairs, correlation between the stocks and currency pairs, and I thought that the way it would start off is just by showing you two trades that I've done this morning and the reasons behind those trades, the reasons that I undertook those trades. Just to give you a grip, we can all forecast the market. I had a very interesting lunch last week with a guy called Max Nusden, who's very well respected in the technical analysis field. And he basically said, and I'm in agreement with him, that anybody can forecast, anybody can have an idea about where the currency markets are going to go. Actually being able to trade it is another matter, and that's obviously the bit that you've got to get a grips with. Obviously, you guys are probably reading quite a lot of reports. A lot of them will be conflicting. A lot of reports are into long-term time frames. You know, people say that euro dollar is going to go up to 150, 155. But how do you trade it to get, up to that level? Do you trade it in small on pullbacks, etc., etc.? And how to know when you're basically on the right side, whether or not you're trading with a long-term trend, a short-term trend, whether you're counter-trending, what to look for in those counter-trends, what to look for in signals, how to get long, how to get short. Okay, so I'm just going to throw bits in the air like I normally do, and hopefully it's not going to be too confusing for everybody. I'm also going to show you a little bit of Ishimoku as well today. I don't recommend trading it as a TA, as a technical analysis tool on its own. But like everything else, if you can combine it for the uses or the purposes that it was built for, then again, it's a decent add-on. You don't want to get too many conflicting views, so you don't want to have hundreds of different indicators that stop you trading. We then look at my chart, and everybody probably sitting there behind your screens will be thinking it looks like madness. I just want to show you what I look at all day, every day, and the different currency pairs. Now, don't get too disheartened, if you like, when you look at this chart. There are aspects of this chart that are virtually ignored. Okay, the bits that I've added on over the years, I suppose. Obviously, this band here is a Bollinger Band. It's not a normal Bollinger Band. This is a channel which basically tries to keep me, or I use it to try and keep me on the side of trend. Okay, so the settings here are a 15 EMA, which is my trigger line. If you like, if there's a holy grail that I've got apart from price action, it would be my 15 EMA. I'm very attached to it, if you like. Now that basically makes up my middle point of my Bollinger Band. Okay, normally a Bollinger Band is a 20. Okay, this is a 15 EMA. Normally a Bollinger Band, I'll just show you. The standard deviation settings are normally 2. Okay, and because I've brought down the amount of periods that I'm using, I'm also bringing down the standard deviation. Okay, so I've got a 15 and a 1.8. I do not trade Bollinger Bands, but what I want to see a lot of the time a warning that I've either gone too far too short, that I should be taking some profit, is the breakout to the Bollinger Band. We know that the market trades 95% of the time inside the Bollinger Band, so if I get breakouts, okay, I know there's a good chance that we're going to sort of push back in, okay, and it just so happens that I'm also, or in this pair this morning, I've been looking for short signals, okay, but my main tool, the main thing that I look for in all the analysis is price action, okay. I'm looking at candles tell me, the larger time frame candles, not down into 1 minute we were looking at the moment, the larger time frame candles to dictate, tell me which way I should be looking. Okay, once I've got that bias, that sentiment from these longer time frame candles, then I'm also looking to other indicators to confirm, to get me on the right side of the trend. Okay, I've got an RSI down here. Now on every time frame I have a 50 line through it. Okay, if I'm trading below 50 and I know that the bias is to the downside, if I'm trading above 50 and I know that the bias is to the upside. The MACD that I've got down there at the bottom is purely for divergence, okay, nothing else. Now this channel here that we've got in, I'm quite fanatical about Fibonacci numbers, the ratios, okay, and the closest I can get to Fibonacci is a 62 EMA, okay, so 61.8% being the golden ratio, so I'm using the 62 EMA to try and get me a support and resistance line, a moving support and resistance line, and that is basically what the 15 is, but in shorter time frames. Okay, if you're looking at an hourly chart, well, we've got 15 EMA on an hourly chart. When you bring it down into a 15-minute chart, which is a quarter, okay, you're obviously timesing that by 4, and that is then producing your 62 on the lower time frame. So as I use 4 hour, 1 hour, I don't really use 15 minutes to be honest, but 4 hour, 1 hour, what I see in the 4 hour, I'm then mirroring it in the 1 hour chart, okay, and this is what they call a moving average channel. So quite easy to make it. It's basically, I shall show you as well, it's 3 62 EMAs. So I've got a 62 EMA, 62 exponential average that shows me the high close, okay, and I've got one that shows me the low close in the middle, okay, and that's basically what these 3 lines are. So this is the close, this is the high, and this is the low. And that gives me a channel of support and resistance. Okay, that's all the intro over and done with. So basically, I'm then looking down to breaking into my analysis. Okay, my charts, my weekly. I always start off with my weekly chart. I know from looking at these charts, okay, every time I'm looking to take a trade, I'm not necessarily going back to the weekly chart because I know what I've looked at in the weekly chart. I don't look at the weekly chart every day. I look at the weekly chart at the end of the week. Okay, what is she telling me? I use chart formations, but I'm not fanatical about them. Okay, it's more about price action. I will put Elliott wave, what I think might be Elliott wave counts onto a chart, especially longer time frames. Doesn't necessarily mean I'm going to trade to them, okay? But I want to get a view, my view of where I think these are going. Now, obviously, the Aussie yen does track the stock market box indices to a certain extent. So if we get stock sell-off, then obviously Aussie yen should push lower as well. The rate cut in New Zealand last night, it's obviously a helping influence with regards to the Aussie dollar. Aussie dollar also pushed off at the rate cut, so that was an added factor which I thought was going to happen and came to fruition. Okay, so here I've got my weekly chart. Like I said, try to ignore everything else. Normally when I'm doing seminars or webinars, I will show quite a basic chart. But like I said earlier, I want to show you what I look at all day. So here we've got a decent run up, a pullback, and then this move here is extremely corrective. And this is basically since the sort of stocks have been moving up. And in the stock market, so I've got this as an ABC, okay? And this, you can see, was impulsive, and this was corrective. So I'm thinking that this is either an ABC correction, which dictates it should come down after a 5-wave sequence up. So we can see 1, 2, 3, 4, 5, ABC. Or this is ABC, this is 1, this is corrective 2, and this is going to be 3 on the way down. But both of my sequences, if you like, dictate that I should be looking to get a decent move to the downside pretty soon. And you can see here, I mean, all by these moving averages that I've got on the chart, there's a hell of a lot of basically flat trading. That's what it's telling us when the moving averages are all coming in together. It's telling us that we're pretty flat. If you look down to the MACD at the bottom, you know, she's virtually zero. There's no mountain. Okay, and it's very, 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 very flat indeed. Here we're sort of trading towards the 50. Okay, so we're still showing that we are bullish on this weekly chart, but with no real strength. Okay, and if we look to this candle here, this is a very decent. It's nothing to do with Bank of England today. This was a very decent move down this week, and this is what I'm looking for to try and get a bias. It did hit the 15. Okay, also had 62. How do you say there's been no momentum today? The markets have been, well, maybe not in stocks, but the markets have been quite aggressive. You had the news from China last night about the surplus, bad stocks. You had the news from about Spain, which was caused a sell-off in the euro. There's probably traders trying to position themselves for the interest rate decision today. Cable's been pretty active, pretty whippy. There's been some decent moves. And Aussie yen, which I'm going to show you now, has had quite a decent move to the downside from last night, and then you're obviously trying to take that bias from last night to get into a trade today. You know, we all have to sleep. We can't trade 24 hours. So just getting back to this chart. So we get a decent move down. Okay, it hits our support levels, which will normally happen. Okay, it'll keep on going down, hit the support, hit the support, hit the support, keep on rising up until we break through that support. The bias should still be to the upside, but I'm taking most of my bias, like I said, moving averages, indicators, most of them are lagging. Okay, so I'm taking most of my bias off the candle formation, and this candle formation, okay, it wasn't a full outside red, but it was a decent red candle to the downside. It's giving me a bias to get short. Okay, I could do with getting rid of those, but I won't. It's just some analysis that I've done before. So here was a decent sell-off. Okay, aggressive to the downside, hits the channel. Okay, decent reversal candle which spiked through, and then a move back up. Again here, we get a doji showing indecision, and these candles, virtually all of these candles, virtually traded inside. Okay, we spiked through, failed to close through the ascending trend line, and then last night, or today, I should say, we rallied up, we took out the high, or it's virtually a double high. So it's a double high. It's going to be a double high low close candle. Okay, this is price action, and that tells me that I want to start getting short. I know I'm going to get a bit of resistance because I'm hitting the 50 RSI, which will normally give me a bit of a bounce. I'm also hitting my channel, okay, but it's a negative candle, so I'm now looking for shorts in shorter time frames on Aussie yen. Okay, 4 hours. Not something I'm going to get sort of too bogged down with. This, you could have had an outside candle to go, but for me to have an outside candle, she has to close up around this level, about 83.28. So at the moment, I've got 4 hour, I've got potentially daily engulfing candle through a trend line. This is now negative, okay, through the 50. So it's showing me a bearish bias, a short-term bearish bias, okay? My longer-term charts, my weekly and my daily are going to have to catch up, okay? But I'm not waiting for those longer time frames to trigger a trade for me. Because I'm a day trader. I'm not looking to wait a week or Monday morning to get on this trend. And what I have a tendency to do as well is I build up trades. Okay, so I'll look to take a short or a long, which I'm going to show you in a second, and then I'm going to explain, and then I'm always going to leave some on. Okay, so I might trade in 5 units, might trade out 4, leave 1 on. Okay, and I'm trying to then build up that short position if the market progresses in my direction. So then I'm getting down to my 1 hour chart. Again, in between 78 and 88, which is not great. 3 waves, impulsive, corrective. Again, I did expect this move down this morning to target this area, or possibly this area, and it was short. But I've still got some decent fibs on. I've still got 1, 2. This was 3, 4 area, and then down in 5. And I have basically, this is a 300 simple moving average, okay? And I want to be looking. We're underneath the my channel line now, okay? So it's showing me that I want to be on the sell side, okay? I'm underneath the 50 after this candle here, okay? Again, it's an engulfing red. It then takes 50 RSI below. The RSI below the 50 mark, so it's showing me that I want to be on the sell side. Now, if this is to be believed, this count, and this is 1, 2, then wave count 3 will only retrace partially. Let's get rid of some of these lines. Otherwise, it's going to get confused. It looks confusing enough as it is, I'm sure. So I'm only expecting small pullbacks. And basically, I'm breaking this down into shorter time frames, and I'm looking for sell signals around these levels. Now here we've got a spike in doji, which tells us that we should start looking to the downside, or there's indecision. Okay, but after a move down and below the 50, that gives me a downward bias. The next candle, not particularly great, but it is a pincer, okay, and I do like pincers. So we've got pincers or chopsticks here, but I would have wanted a lower close, okay. She's still an inside candle, and inside candles show indecision as well. So we've got an indecision bar, another indecision bar which trades inside, and this one really needs to go lower. What I'm looking for, getting down to short time frames, okay, I'm looking for when we get towards this level, and notice how I've put a line on here, 83.35. So when I'm looking at my hourly, okay, I'm looking for a combination. I know there's decent resistance here because I've got my 62 channel and I've got my 15. So 83.35. I go back to my 1 minute chart. I put an 83.35, and I'm looking to sell signals around this level, and here I break out higher. I then, not great reversal pattern, and then she comes back inside. What I'm looking for at this level, okay, or around this level, give it sort of 5, 10 ticks, maybe not 10 ticks. I'm looking for sell signals, okay, and I'm looking at scalping. So I'm looking at a 1 minute chart, a 2 minute chart, and a 3 minute chart, and I'm trying to get a signal to sell. We didn't actually get it until this is a sell setup here. Okay, so green candle, spiking candle, and then a red candle that takes out the low of this candle and it stops above the high. And then I'm trying to ride it down, because I'm trying to ride it down below obviously below this morning's lows, but get a bit on. If it moves a bit further up, and I'm still looking at 83.35, I'll add in at that level. Okay, the only time that I'll decide that I'm wrong on this call is if she breaks out through my channel to the upside, and at that point she'll probably take out the 50 RSI as well, and then I'll have to sit down and stand back and have a rethink. But technical analysis to me is about getting a bias. Okay, is the bias to the upside, is the bias to the downside? If she pushes through certain levels, I'm more likely than not to wait for retracements to enter short positions, because I don't like having 100 point or 200 point stops particularly. I will do if I get a very, very good 4-hour candle that I've missed, and I think and the length of that 4-hour candle is maybe 100 ticks, and I think that I'm going to miss a decent move if I don't trade it. Then I'll put on one unit. I want to be in it, but I don't want to be in it with as much exposure as I did if I traded a retracement. Okay. Another way that you can trade the retracement is you wait for a breakthrough through the channel. You then negative, wait for a lower high. When you've got a lower high, actually then breaks through to the downside again, then you've confirmed that at least you've got a trend change. It's a more conservative manner to trade. You've at least then got a trend change. You're underneath again. Stop loss is either above here or above here, and then you try and take it to the downside. Like I said, I am short this pair. Okay. Does everyone get that? I'm sorry if obviously nobody's posting me live questions, so I just try and explain what I see, what I do, how I decipher trades that I'm going to take. Any questions from anybody else here? I can't stand stochastics. I don't particularly like indicators. Okay, oscillators. The majority of them are lagging. I don't trade the RSI. It gives me a bias. Okay, it tells me whether or not I should be looking for short signals or long signals, and that's purely the 50. Okay, I'm not fanatical about everything else. I'm not fanatical about Bollinger Band. If anybody said to me, what was if I had to take away everything on that chart and have one indicator, what would it be? And it would be a 15 EMA. The daily chart, how did you derive the horizontal lines? What's that? Okay. I will trade Queen. I've basically 62 EMA. We'll do it. Okay, 4-hour chart. Okay, where is the 15 EMA on the 4-hour chart? It's at 83.40. Okay, so drop it down to 1-hour chart, 83.40. Okay, so the 62 in my hourly is my 15 in my 4-hour. Okay, simple as that. Not rocket science. Horizontal lines. I've got an ascending trend line on my daily. Don't worry about that. It's just, in fact, I don't even know what that. I use different colours in different time frames. Okay, so that's probably off a weekly chart. Yeah, just show me a high. Just show me some price action level, if that's what we're talking about. But that's a long way off. I won't worry about that too much. Okay, sell signals. When you get down, you want to take your bias off your higher time frames. Okay, so your bias is engulfing candles that fully take out the price range of the previous candle. And here we have a classic engulfing candle. Okay, you will invariably find them at the top and the bottom of ranges, but you'll find them in different time frames. The higher the time frame, the more powerful they become. A weekly engulfing candle is stronger than a daily engulfing candle, etc., 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 etc. Okay, so here you've got a daily engulfing candle. I doubt very much if the market is going to move that back up to 83.55 to cancel that engulfing candle. Okay, so that is showing an engulfing candle. An engulfing red candle to me is better than a doji. It's better than any other candle formation that I know of, because it shows that the market tried to move higher, or sometimes, or most of the time did move higher, but then the market completely reversed and pushed us down to the downside. So it's not just a rejection candle, okay? It's a rejection and reversal candle. And that's why it's more powerful than doji. A doji is indecision. A doji is a rejection of price at a certain level. It is not a reversal candle. An engulfing candle is a reversal candle. So what's my take on 21 and 34 EMAs? Everybody, whatever floats your boat, basically. I have my own. I stick to my own. I know that these exponential moving averages will work on most time frames in most currency pairs. So I just stick to these. You know, people have free, you know, EMA, the 5 EMA, push forward free spaces, blah, 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 blah. Most, I've said this quite a few times and most people don't believe me, but most bank traders don't use charts. God forbid. They use order flow or they use fundamentals. There are quantitative analysts, and there are different, you know, there are people that obviously, bank traders are inundated with reports, okay, either from internal analysts or external sources. And a lot of the time, they just want a report that turns around and says, at the open, 7 o'clock open, sell there, buy there, or if it gets through this level, sell it. If it gets through that level, buy it. They don't want to look at EMAs, etc., etc., etc. Prop shops use all sorts. Prop shops use automated trading systems. Prop shops, a lot of guys use charts. A lot of guys use point and figure for congestion zones and stuff like that. Some guys will just purely look at price action. You know, everybody has their own thing. All you've got to find is something that gives you more winners than losers. And then you start off with an account of X, and you build it up, build it up, build it up, build it up, until hopefully one day you don't have to go to your 9-to-5 job, and you can live off the income that your system gives you. If that's what you want to, you know, if that's what you want to do. Order flow in banks. Well, when I was a broker, you might. I mean, I wasn't a spot broker, which is what we're looking at today. I was a forward broker. So we would get, say, Royal Bank of Scotland, mate man there would come up and say, what's 6 months? And 6 months was basically a swap trade. So you'd exchange dollars to Swiss spot, and then you pay it back at a given exchange rate in 6 months' time. And that was the most common, or the period to trade, okay, 6 month forward contract. And basically, UBS would ring up, it'd ring RBS, it'd ring NatWest at the time, it'd ring Chase Chemical Bank. These are all names going back a few years when I was broking. And then he would basically he would move the market, okay? So he would buy 6 months from everybody. And then the 6 month price wouldn't be 302, 300. It would be 308, 306, or whatever. And that is order flow. But he wouldn't necessarily be doing that to build a position on his book, because he might not be a prop trader within a bank. He might be an order trader. He might just be the head Swiss trader. And he might have been asked by ESSO or, you know, a very large corporation of what their 6 month swap rate is going to be. And he traded with UBS. UBS didn't want to hold that trade, so he put it into the market, or he got rid of it. And that's order flow, okay? A lot of the time, banks, big corporations will call up 6 or 7 banks and ask them for 6 months. And they all read in the right way. So he might not deal, but the price of that 6 month transaction would increase because just from making that call and these guys reading him correctly, it's gone up. All right. Yeah, I suppose so. Never tried it myself. Never tried flipping a coin. But I did know of a girl that was supposed to going to work every day, flips a coin to buy stocks or FTSE at the open. She would take profit at 30 points and stop loss at 20 points. So yes, I've never met her, so I don't know if it's an old wives' tale or not, basically. How do you know that an impulse starts, not just a Lego approach? Basically, the rate of change. So this was 2 days or 4 days to make the low. This has God knows how many days. Let's have a look. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So you can tell, and you can tell visually that that's corrective and that's impulsive. That you don't have to be a rocket scientist for. Yeah, this is a daily breakout, but you're going to get a bit of support here. Let's just see what she's doing 1 hour now. So we're breaking lower as we thought. Now another good one today. Okay, this is now. You can see the Ishimoku, great. Okay, so as I'm looking at that Aussie yen, because I'm trading it off a 1 hour chart. Okay, because I'm trading off a 1 hour chart, I want to know what Ishimoku show me on the 1 hour. Okay, she's broken through. The time span, lagging span indicator is outside of the cloud. It's broken. It's underneath chart action, showing a good break to the downside. The spans, or the send lines, I should say, are in order, which dictates a good move to the downside. Where is the resistance? You know, this isn't rocket science. This is just another confirmation that I should be looking to get short, not long. Okay. So I've got my view from my daily chart. I've got everything else. I'm combining it. Blah blah blah. This is literally a flick on, flick off. Where should I look to sell it? Well, I should look to sell it around here, around 83.29. Bang, 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 5 times. Okay. It shows decent resistance at that level. Okay, and now she's coming off. Again, that's not rocket science. It's just something to add into the bag, okay? Add into your toolkit. Let me just get this chart up again. So, the other one taken from today, and if she's rallied, oh, I'm out of it now. I banked $320. Okay, let's break it down. There's a monthly. There's a fib level on there. Didn't react much on the fib. Okay. There's a monthly chart. Like I said, don't really trade off it, but I'll have a look. It came out of my Bollinger Band, okay, and then moved higher. So bias, well, bias is still to the downside, but there's nothing to say I can't towards 168.40. Okay. Weekly. Again, the big move down. Zoom in. What have I got here? Okay. Well, this is from this is from some work that I did for the company I was working at. So these are engulfing candles. Okay, engulfing red is what I want to see off the band width or off the channel. Engulfing red moves down. Okay, engulfing green moves back into the 15 EMA. Moves back down again, and then we get an engulfing green again, okay, which has come up. So I've got 5 waves down. What should I at least expect? I should at least expect 3 waves up, okay. I'm conscious of this level at 166.70, but my bias here is to the upside. I've got an engulfing. I'm now above my 15, okay. So this, I'm going to show you the cloud in a minute, just to show how I've worked that with the cloud as well. You'd be quite astounded how this chart formation, if you mirrored what you should have done on an Ishimoku cloud formation. Daily, my God, You can tell that I've used this as for some coursework. So here, 1, 2, aggressive move down, 3, choppy, 3 waves to 4. Okay, sell signal engulfing. To zoom in, engulfing red. These are actually should be on the Ishimoto cloud. Engulfing red. Okay, breakout, breaks to the downside, boom, and then we get that engulfing weekly candle, moves back up. So now I'm thinking ABC up towards that channel line, at least. But also what I can see a shoulder, I can see a shoulder, I can see a head, I can see a neckline. I want to be buying dips, okay? And there's dips in here. I bought this one, I got out there, okay? I bought this morning. Unfortunately, I'm out again, a bit nervous about the. I think the Bank of England could do anything today. I don't mean by, obviously if they raise rates, it would have been fantastic for this trade, but I don't think they will, and I think they're going to be very cautious in their approach. But we'll wait and see. But so do you see how I'm getting this bias? Okay, look at that inside bar. Though it's small, it still counts. That week there, 27th of February, you had virtually no movement. Then you've got an outside green candle, okay, off the bottom. You've got to buy it. Okay, then comes back and moves up again. Again, last week, pretty decent candle, bit rangy, and then she's moving to the upside. So then I'm down to 4 hours. Okay, this is my channel, which I can see on my daily chart. So I'm getting out of wind. I should have kept this trade. Okay. Okay, I had here a count at 1, 2, 3, 4, 5. I then expected it to go 1, 2, 3. It didn't. It produced this one, which was actually nearer to 261.8%. Put it on. I'll do it on the 1 hour because it's a bit confusing. Okay, it then came down to this level. We then had to push up. Now this morning, I'm thinking that this is now 1, this is now 2, this is now 3, or this is A, B, C. Either way, I want to be long. What is my RSI telling me? It's telling me to get long. What is MACD telling me? Nothing. There's no divergence. So that's great. I'm above my channel. Okay, I know I've got support. Then we come down to this scenario. So here, 1, 2, 3, 4, 5. This might have been if we want to start talking about Elliott wave, which I don't particularly want to start talking about, then this could have been A, this could have been a B wave extension, this could have been a C. What I see is, I see impulse, I see corrective. So I want to be getting long again. Okay. And here is your prime candidate. Bit choppy, but I can see one wave up here, a pullback. Okay, 161.8% also coincides. With a previous high. So get a spike up, indecision. Remember, it's not a reversal candle. It's indecision at that level. Moves lower, another spike up, moves back down. So I'm then looking at this 1, 2, 3. Well, this could potentially be 4 wave count, 5 to the upside. So risk reward is absolutely fantastic around this level because my stop loss is literally going to be down here. Okay, my profit target potentially up here. I actually got out around this level. But if it is 5th wave, I'll probably get another chance to get in as well. Maybe even at better levels. Depends what BLE does. Okay, so we move down here. Now, this morning, okay, 160.67-ish, okay, is my support level. You can tell that I've been messing around because I've still got my fibs on here. So what did I do? I draw a line at 160.65. Okay, bring it back. I want price action. I actually took my first, I was greedy, as I normally am. I took my first long here. Falsely as well. I thought that it met the bottom of the Bollinger Band. I thought that was going to be the base. And then I was going to ride it up and it was going to stop short of 160.65. It didn't. Okay, it moved up, it hit the band, and then it gave us another leg lower. Now, bang on 160.65. What do I get? Can anybody see what I get? Hang on, 160.65. Around this area. There are two signals that I look for. An engulfing candle and an inside candle. An inside candle shows indecision. Okay, an inside candle is indecision, and you then wait for the next candle for confirmation. Okay, so here is an inside candle, spike through 160.65, then a small inside candle, and that candle there is good enough for me to get long. Okay, it then moved up. I took a bit off there, it moved down. I then got another engulfing candle with a higher low, okay, and that was my next signal to get long. Now, from that point on, my stop loss is under here, okay, and I do not want to add back into that position because I haven't got confirmation yet. I haven't got a higher high. Looks like a bit of a demented two-headed reverse head and shoulders, if you like, but I still haven't got above here. I'm not above my 50 on the 1 minute scalp trade. Okay, so I'm long one here, long one here, take one off here, add another one in here. Okay, from that point on, I have to wait until the trend breaks out, if you like, above 50 and above the channel, and I get that here. Okay, with an engulfing green candle that's out of both and above the 50. The fibs then go on, which were on before, as you saw. Okay, I then took some off there. Okay, and then you've got to leave some on, because you've got to leave some on for the potential ride. Okay, which I wish I had done. I took it off here. I actually had a take profit order at 161.10, which coincided. Sorry, let's get rid of that. Coincided around the previous high. So happy enough with it. It's a winner, but I could have got a bit more out of it. This was a little worrying factor, but your stop loss is down here, or at least to your average entry. Okay, so you've banked some, you're going to get out with some if you move your stop loss to entry. Okay, so it's about not panicking. It then comes down, jobs around a bit, but hits the channel, and Bob's your uncle. And notice how the channel is still using it as support. Okay, a little bit worried around here, got a bit of divergence, but it's 1 minute, still making higher highs. And you know from your fib level on your hourly chart, okay, that you want to be looking up to here. Sometimes, not always, sometimes I'll try and get an indication of possible reversals just by putting another fib on. So maybe around here, which also wasn't a million miles off my profit target. Any questions about that? So it's breaking down large time frames. I shall read them out to you. Euro Huff, crude. I look at Royal Bank of Scotland, powers involved in that. FTSE, dollar Swiss, dollar CAD, New Zealand dollar, dollar yen, euro Aussie, euro dollar, gold, sterling Swiss, sterling dollar, euro sterling, Aussie dollar. Dow, euro Huff, euro zloty, DAX, euro Swiss, sterling yen, euro yen, Aussie yen, sterling Aussie. No, sterling Aussie is the same, sorry. I repeated that twice, that's because that's my Ishimoto cloud. But I wouldn't say I regularly trade those amount of currency pairs. These two pairs, for me, the maximum I'd have on is 4 trades at a time. These two currency pairs, for me, this morning, gave prime opportunities. Okay, I'm trading with a view, I'm trading with a trend, I'm trading a pullback. My stop loss is small, my profit target is very large. No, not really. I just like my view to be going in the right direction. Yesterday afternoon, I think there was made pretty poor, made about $400 buying, scalping to the upside, sterling dollar and euro dollar. Now, if I'd held those positions, I would have got mutilated today, but just in, out, in out on those. I did think I was going to get a higher bounce, so just scalping them, trying to take them higher, and basically close them off before well, it was about 4:30. But I'm just looking for prime opportunities. I'm not 1 minute chart. I'd never go higher than a 3-minute chart, because it basically means that stop loss would have to be too big, if for a scalp anyway. But scalps, you're in much bigger size than you are if you're just taking a long-term view. There's nothing wrong with taking a long-term view, it's just going to take you longer to get there. Okay, a scalp trade, you want to either start small but then add in quickly if it's confirming that you're going in the right direction, or you add a lump at a specific level, okay, and then you trade out of that lump, either or. And then obviously in that factor, if you're doing it that way around, you want to get your stop loss into entry as quickly as possible. Try and bleed the lump up if you like. So if I use strange terminology. That was my 1 minute chart setup. I don't mind showing people, or I'll show, you know, I've given you 100% of what I look at this morning. One thing I didn't look at actually, I suppose I should have, it's the sterling Aussie Ishimoto. Here you go. So, it was bullish. So I knew that, well, I didn't look at it, but if I had done, I would have known that I've got a positive breakout. Everything's bullish on there. Does anybody want me to talk? No. I don't. I prefer them in longer time frames. I prefer to look at them on weeklies and dailies and 4 hours. But like I said, if I'm taking a scalp trade, I will see whether or not I'm trying to buy straight into it, which obviously isn't what you want to be doing. See where this Aussie yen is getting on. Change the camera again. Anybody want to ask any questions, or has anybody got any currency pairs that they quickly want me to look at? Yes, but not dollar yen, which might sound a bit. Dollar yen's got a mind of its own, really. The trouble is with dollar yen, you've got two safe haven currencies. So, what's this line? This line is that daily support line. So that's an hourly chart. Okay, daily, which is here. I'm not sure about euro dollar at the moment, to be honest. I've got counts on here. I've got an ABC 1, 2. This should be 3, but it just seems a bit. I'm not long. I'm not sure at the moment. Daily chart is telling me to get long or to stay long. It's giving me that which she might engulf this week. If she engulfs this week, then my bias would strongly turn to the downside, and then what you might get is a head and shoulders. So a bit of a mixed bag, really. I know what they're saying about interest rates, but she'd have to bounce off this level pretty soon for me to give the bias again to this sort of level, this 144.74 level. Going back into, you know, that was where I was at. Now, a good way to trade this, it's not really a system, I suppose, but a good way to trade it is look at the engulfing, okay, engulfing candle through and below, okay, dictating you should be looking shorts. Then she bounces up, okay, doji bounces off the line, okay, engulfing candle, but only towards previous low. Inside candle, there's your confirmation candle, then she moves up, okay, hits the channel again, choppy, oi, 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 and then down. Obviously this morning as well was pretty. If Trichet wants to rate hikes, Trichet will rate hikes, hike rates. He will hike rates. It's not. I've always, well, for a long time, I've always, especially obviously since Greek problems, it's so hard for that guy to use sound fundamental judgment in going forward with European rates. There's so many structures, so many conditions, so many countries that he's got to consider on the way. But he's also very, very stringent with regards to inflation, and you can't ignore that last statement. Okay, I personally think this is a pullback, and the way it's pulling back, okay, does not look particularly impulsive. One thing you have got, okay, you've got a 5-wave count here. So you've got 1, 2, 3, choppy 4, 1, 2, 3, 4, 5, 261.8%. Would I sell it now? Nope. Would I buy it now? Nope. I'm not. I'm in the standard side field at the moment. The fact that that's a 5-wave count down does give that a possible bearish overview, but you'd need to see another move up and then a wave down. And you've got to also remember that if you are going to get sort of fanatical about Elliott wave, which I'm not, as I keep on reiterating, what I am fanatical about is SIB levels, but if you are fanatical about Elliott wave, then you have to remember that these ABC corrections are made up of 5 waves and 3 waves and 5 waves. So that can sometimes throw a spanner in your works when you look at these shorter time frame wave breakdown. There's no point in that. You know my bias in sterling. I've got a very bearish bias on Aussie now. I've got a bias Aussie yen to the downside, sterling Aussie to the upside, and I don't know if that sterling Aussie upside bias is because sterling's going to rally or if Aussie's going to fall. So I would prefer to trade sterling Aussie than I would sterling dollar at the moment. I'm not trying to get out of the question, but you'll be able to see by the amount of detail that I have on my euro dollar chart compared to my sterling dollar chart, which is pretty. There's not a lot to it. Okay. Daily, that's a weekly trend line, that says. Okay. Obviously, decent daily engulfing brought us down. Now I'm sort of in a no trade zone because I'm above the 50, but I'm below the 15. So the bias is still slightly to the upside, but I've just got to wait for things to come out. And also, if you read the blog, we talked about this. There's something else that you can look at, which is a butterfly pattern. It traded pretty well, and the target was 61.8% of the whole pattern. I'm not the best at these. There's another analyst who works with FX Street who's very, very good at this. And I said basically between 50 and 61.8%. So it's reached its target as far as I'm concerned. Could well bounce to the upside. And also what you have to remember, okay, this weekly, okay, symmetrical triangle formation, she has broken to the upside. The next target, as far as this chart formation, is bull, okay, and she's just coming back to test that weekly trend line, which she does a lot. So weekly, daily, bullish, really. But I'd like to see an engulfing candle here, just to keep on its way. Time is up. Take care. I hope it's been educational for you, as obviously the webinars are supposed to be.